And good morning, good evening, good afternoon, traders all around the world. This is FXPassion broadcasting you live on YouTube. And this is Forex Trading Course 101. What we are trying to do here, we are trying to build the three pillars. Pillar number one is the strategy and or system. Pillar number two is the risk management. And pillar number three is the psychology part. We are trying to understand how those three pillars blend together, right? How our psychology affects our risk management decisions, and how our psychology affects our decisions, how to execute the strategy and the system. And what the champion beginner traders say about psychology. Champion beginner traders always say, I am not going to live and die on trade by trade basis. And of course, this is a quote from Mark Douglas, and I have my own quote here on the left. When the market scares you, don't be afraid to do the right thing. What is the right thing to do? The right thing is to follow the concepts, follow the rules, right? And remember, everybody, 90% of traders lose money in the Forex market worldwide, and the webinars are not trading or investment advice. The webinars are for educational purposes only. For homeworks or questions, you have my Gmail contact, my Skype contact. Okay, so that being said, finding trading opportunities with the counter trend lines. Okay, new lesson today. So we are going to close most of the things. We are over the Forex trading week. Close. Let's close. Hello Tari, close. Oh my gosh, look how many charts we had, right? Close this one, close, and then let's see how are we doing as per. So we are winning on, what is this? AUD short, on the otherwise we have a floating loss, right? Okay. What we are going to do, everybody, the week is over. We are going to close when the trades are in profit, okay? Or we are going to leave the market hit the stop loss, okay? And the cat. Positions, orders, there you go, distance, okay? Either way, everybody, manage your trades, okay? Manage your trades. We are over the trading week, so you need to manage the trade. Now let's talk about finding trading opportunities, okay? So what are counter trend lines, you know? So in an uptrend, you know, this is an uptrend, and in a downtrend, when the market's making lower lows, lower highs, lower lows, lower highs, you know, and we are going to use a trend line to confirm the uptrend, right? We're going to use an uptrend line, and let's make it red, right? Uptrend line. Like this, and then we are going to have a downtrend line like this, right? So what are counter trend lines, everybody? Counter trend lines are trend lines that are positioned in the opposite direction. So in an uptrend, a counter trend line is down. Counter trend line, okay? So one more time, what are counter trend lines? Counter trend lines are trend lines that are positioned in the opposite direction in regard to the trend line. So if we have a downtrend line, the counter trend line is up, right? And when we have an uptrend line, the counter trend line is down. Okay, nothing that difficult, nothing special, right? Now remember, what else did we learn? We learned also about the market wave, right? So And in a market wave, you know, in a market wave like this, and this is the trend line, like red. Remember, we learned about that we have short-term trends, right? We have short-term trends, you know, extension, retracement, extension, right? Okay, something like this. And so we have also different counter trend lines that we can trade, right? So talking about the market wave on the monthly, weekly, daily, 4-hour chart, whatever the time frame, we said that the best entry is here, right? This was the best entry. Okay, why is that? Because here the market broke the counter trend line and the short-term trend changed. The market was making lower lows, lower highs, lower lows, lower highs, and then it changed, start making higher highs, higher lows, higher highs, higher lows. So this was one, right? And moving forward with your knowledge, everybody, what happens if we miss? What happens if we miss this entry, right? Well, we can still capture opportunities, everybody, you know, with this smaller, right? Smaller counter trend line here, counter trend line here, counter trend line here, right? Hello Allah, how are you? But there are some rules, okay? There are some rules, some trading concepts, okay? And trading rules. Number one, when enter at the CTB stands for the counter trend line break. When enter at the counter trend line break on the wave, the stop loss goes above or below the most recent extension. And number two, when enter at the counter trend line break on the short term trend, the stop loss goes above or below, uptrend, downtrend, right? The stop loss goes above or below the relevant high or low of the short-term trend. Those are the trading rules, okay? You can accept what we are teaching you, everybody, you can reject what we are teaching you, but those are the trading rules, okay? Number one, when enter at the counter trend line break on the wave, the stop loss goes, and we learned this already when we learned about the market wave, the stop loss goes below or above, below in this example, of the most recent extension. So this would be the stop loss, right? So not this one, not this one, not this one. We would enter here, and this would be the stop loss level. So let's write this down. Stop loss on the wave. Okay, we are trading the market wave. This is the stop loss, but it's going to change, right? So I'm going to delete here, everybody. Nothing special, right, about the counter trend lines, but we can find opportunities, right? tell me everybody what currency pair do you want to check, so we can go and see the live market and implement the counter trend lines, right? So number 2, when enter the counter trend line break on the short-term trend. So this would be the short-term trend. This would be the blue, the short-term trend. Okay, so this is this, everybody. Let's color code this differently. Okay, so a little bit more aggressive, right? Something like this and this and this. So this would be the quadrant. Okay, so this quadrant is this quadrant here. And we would have a counter trend line break here, right? So when we enter the counter trend line break on the short-term trend, the stop loss goes above or below the relevant higher low. So if I would enter here, well, this is the relevant low, right? Or this is the relevant low. Which one? Right, this is the relevant low, the one before, yes sir. Okay, this is the relevant low. Why is that? Well, because if the market is going to reverse and stop me out, then we have a change in the short-term trend. And we learned about this too, right? Clone stop loss on the short-term trend, on the short-term trend. Okay, very good. Tar is saying GBP JPY hourly. Okay, GBP JPY 1 hour chart. Okay, everybody, so it's a great example. Let me see how far can we go. Okay, everybody, so 1 hour chart, extension, retracement, extension, retracement, extension, retracement. Okay, now I cannot compress the chart more. Okay, everybody, I'm going to go on the 4 hour chart just to show you spatially. Okay, can you see everybody? So what we are seeing on the left, it's what we are seeing on the right. Yes, we are seeing on the, it's on the 1 hour chart, but I'm going to compress because we cannot see all the waves. So what we are seeing, everybody, let me see if I can compress more. Do we have? Okay, I'm going to go on the 8 hour chart. Now there you have it, everybody. Okay, so what you are seeing on the right, it's the 1 hour market wave. Okay, can you understand, everybody, that what we are seeing on the right, we are seeing on the left too? On the left is theory, and on the right is the market. Okay, do you agree, everybody? I mean, yeah, we are looking at on the 8 hour standpoint because I cannot compress the 1 hour chart that much. Can you understand, everybody, that we are looking at the same? What is on the left? The violet market wave, and then the blue, it's the short-term trend. Market making hard highs, hard lows, and so on. Okay, great. So this is the opportunity, everybody. This is how this works. This is the 1 hour chart, okay, and see everybody, this is the 1 hour, this was the first one, this is the 1 hour chart, and the first counter trendline break on the market wave was here. Okay, do we agree everybody that this was the counter trendline break on the wave? Let's make it bigger, right? Okay, so this is the first count, and let's make this transparency. There you go. Do we agree everybody that this was the first counter trendline break? Yes, okay. So if we would enter here, everybody, and we don't see the future, right? If we would enter here, what would we see already? We would see that the market, it's not making lower lows, lower highs anymore, you know, but it starts to make higher highs, higher lows, higher highs, higher lows, you know, higher highs, right? Can you see the change in the short-term trend, everybody? So let's make this like this. And red and transparency, okay. Can you see everybody that we have a change in the short-term trend? Can you see that the left side is one story and the right side is another story? Do we agree everybody that we have a change in the short-term trend together with the counter trendline break? It's a yes or no question. Can you see everybody? Chat, just give me a second. Yes, okay. So where should the stop loss go? If this is the area of our entry, we had the counter trendline break, right? I'm going to compress the chart a little bit. Compress the chart, compress the chart, compress the chart. So if we are going to enter here, buy in the market, everybody, where should the stop loss go? Should the stop loss go down here, or should the stop loss go down here? What are the rules saying? Where should the stop loss go? Is the stop loss 1 the correct one? SL1 the correct one, or is the clone stop loss number 2 the correct one? Which one is the correct one, everybody? Stop loss number 1 or stop loss number 2? You can say stop loss number 1. You can say stop loss number 2. You can say I have no idea. Below the lower low of the structure, correct. So the stop loss number 2 is correct, right? Okay, great. And let's go back here. So we entered here, right? This was 1, and I'm going to delete, 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 delete. Now what happens if I was sleeping, you know, I was sleeping and I was sleeping, and the market is here right now. I was sleeping, you know, or I was out, I was traveling, whatever, you know. What now? What then? We're going to connect some of the highs and the lows, you know, not all of them, but, you know, the relevant ones. You know, short-term trend, you know, high to low, low to high, high to low, low to high. There you go. So how are we going to take advantage of the market? You know, this was the entry on the market wave, the circle. How are we going to take advantage? How are we going to find opportunities if we are here? So stop loss number 2, yes. Stop loss number 2, yes, sir. How are we going to take? How are we going to find the opportunity right now? Oh man, I lost the entry, you know. The train has left the station. Elvis has left the building. Make sense, guys? What can we do? Should we enter? Should we jump? Should we wait? What should we do? Let's see, what is the picture saying, right? This is the picture. What can we do? We lost the entry. Well, we can wait, right? And we can wait for the next counter trend lines that are going to happen. What's the difference? When enter at the counter trend line break on the short-term trend, the stop loss goes above or below the relevant highs and lows. This is why we draw the relevant highs and lows, everybody. Okay? Trade the short-term trend with the extension, stop loss below the relevant high or low. Okay, so what we're going to do, okay, we're going to wait for the market to start retracing, right? Now this is how we trade. It's nothing special really. So we are here right now. We are here. Okay. Now what do we want to see? We want to see a retracement on the short-term trend, right? So I'm going to monitor, I'm going to zoom in really for you to see, everybody. So I'm going to monitor the market, and still market's going up, right? And so I'm monitoring the relevant highs and lows, right? The market's still pushing up, still pushing up, still pushing up. So no entry for me. Up, 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 up again, you know. And finally, right, the market's moving up, 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 and finally here is the opportunity, you know. This would be the counter trend line break. Now let me put a vertical line to see if I did something wrong, or this was the no, this was the extension. It was a huge extension, right? So this is the market right now, and counter trend line, bam, we are in the market. This was the next entry, everybody. This was the next entry. This is the candle that broke the counter trend line, and this was the entry. Now here is the trick. Where should the stop loss go? I'm going to compress the chart. Okay, I'm going to compress the chart. Should the stop loss go down here? Should the stop loss go down here? Or should the stop loss go down here? So is the correct stop loss the stop loss number 1? Stop loss number 1, clone. Is the correct stop loss the stop loss number 2? Or is the correct stop loss number 3? Which one is the correct stop loss? What would you say, everybody? Is the stop loss number 1 the correct one? Is the stop loss number 2 the correct one? Or is the stop loss number 3? You don't see it, right? Which one is the correct stop loss? Stop loss number 1, stop loss number 2, or stop loss number 3? What would you say? Stop loss number 2, great. Obina, stop loss number 2, yes. Okay, now, here is the trick, everybody. There is one more rule before we enter this market. Before we enter the market, what you can see, everybody, is if I'm going to use the stop loss, so I entered here, if this is my stop loss level, can I expect to make double before the market wave retraces? Everybody? And this is where we lose money as beginner traders. So this was the market, higher highs, higher lows, higher highs, higher lows, you know, and we are entering in here, you know. Can we expect that we are going to make double? So if I'm risking 1, those are the risk management rules. If I'm going to risk 1, I need to make minimum 2, right? So as you can see, everybody, this is the lesson, right? This was the entry. The entry was here, but we lost the train, and then we have different entries, different counter trend line, counter trend line, counter trend line. But every time that the market moves up further into the extension, the technical risk, what is the technical risk? So before entering, technical risk. Before entering into the 1 hour counter trendline break, short term trend, we need to understand where we are in relationship to the market wave. Okay, this is the technical risk. The market is making, so you need to understand this, everybody, and learn, hopefully, that this was one entry, this is another entry, another entry. Now we are passed over the relevant high. We are passed over the relevant high. The market confirmed the extension, and we are up in here. So this is the technical risk. Before entering into the 1 hour counter trendline break, short-term trend, we need to understand where we are in relationship to the market wave. Low probability to have 1 per 2. Yes, sir. So, and this happened here, right? So let's make double arrows. double arrow. So we are here and we are over the relevant high, right? Talking about the market wave high. So, and we are here. This is the market wave high. Passion, this is too complicated. Watch the recording. Watch the recording 4 times. This is the relevant market wave high, and this is, we are over the relevant market wave high. So we are in an extension already. The extension is confirmed, and this is the mindset, everybody. After the extension, what must happen? What must happen? It's a must, it's a law. The market cannot move otherwise. When we are in a confirmed extension, we have a higher high prior to the relevant high, the most recent one. We are in a confirmed extension, you know. What is the technical risk? Exactly, the market must retrace. It's a must. The market must retrace. So when this happens, everybody, what we are going to do? So should we enter the market knowing this? Should we enter the market or should we stay out? Do you think that professional traders are in the market or they are staying out? Because we know that we are in a confirmed extension. What do you think, everybody? Should we take advantage of this opportunity or should we stay out and wait for the next market wave, next retracement? What should we do? And if you say, okay, let's go long, what's the solution? I cannot have a... So this was the example, right? Something like this. We are here right now. Okay? So if I'm going to take advantage of this counter trend line, now I cannot expect to have 1 for 2. Now let's make it lower. So 1, 2, right? I know that the market is going to retrace. Stay out, wait. Okay, everybody, fair answer, you know, in this example. So trading rule, again, trading rule, okay? Once over the relevant high or low of the market wave, not the short-term trend but the market wave, you can still enter, but the stop loss goes above / below the most recent, not necessarily, sorry my English, not necessarily relevant, the most recent high or low. Okay, trading rule, once over the relevant high, in this example, once we are over the relevant high, once we are over the relevant high or low of the market wave, you can still enter, but the stop loss goes above or below the most recent, not necessarily high or low. So this means, everybody, that I can still enter this trade, my stop loss goes down here, and this is my risk. Okay? If you want to stay out, it's okay. If you want to wait, it's okay. But if you want to enter the market, then you need to apply this rule. Why? Because the market sooner or later is going to retrace. And when it's going to retrace, we are going to have a losing trade. And those losers are okay. Passion, how can a loser be okay? Because we don't know the future, we don't have a crystal ball, right? So a professional trader would enter in here, and this is the risk reward. Okay, so we are in the market. We are in the market in here. This is our risk, this is our reward, and we are going to manage the trade. What does this mean? We are going to, every time, I don't know what is going to happen, right? Maybe I'm going to lose. But if the market is going to push higher and higher, because I don't know the future, then every time the market is going to make a new swing on the 1 hour, meaning it's going to make a new higher high, a new higher low, then we are going to move our stop loss number one to break even, and number two, we are going to continue to cancel and replace. Okay? So I'm in the market, and let's see, the market sideways, up and down, sideways, and moving up, right, moving up, there you go. Okay, everybody, so do we agree that the market made low to high, high to low, low to high? The market made a new swing, right? The market made a new swing, yes? So basically we are in profit here, right? It's not one, but still okay, right? We entered at the green. Now this is our profit. Agreed, everybody? We entered at the green. Our stop loss is down, stop loss number one, and the market made the new swing on the 1 hour chart. From low to high, from high to low, and low to high, yes? Yes, okay. What we are going to do, everybody, because we are in an extension over the relevant high, then we are going to move our stop loss down. We are going to adjust our stop loss, and we are going to move our stop loss down here. Okay? It's a technique. Passion, can we leave the stop loss where it was? Yes, you can, absolutely. You know? You can leave your stop loss where it was, or you can move the stop loss below or above the most recent low, or you can move your stop loss to break even. Why is that? Because we are in over the high. Okay? Oh, Passion, but what if the market stops us out? It's up to you, everybody. This is your decision. Okay, so what I would do, I would put the stop loss not on break even, I would put the stop loss a little bit lower, you know. So if the market is going to retrace, and it's going to retrace sooner or later because we are passed over the relevant high on the market wave, big difference in understanding. We are passed over the relevant high of the market wave, not the short-term trend. Then I know that the market is going to retrace, right? But also on the other side, I don't want to be stopped out, because every time that the market stops me out and it breaks another counter trend line, their technical risk is going to increase. So I'm going to go like this, okay? I'm not going to put on break even, it's up to you. Now let's see. the market made another high. See everybody? The market made another high. Now I'm going to move my stop loss here a little bit forward, I mean a little bit above the break even. So I'm in profit, and if the market is going to stop me out, I'm going to end in profit either way, right? So this is a great example, everybody, how to manage a trade with cancel and replace. Okay, and the most important part, in doing this, we don't have risk anymore. We don't have risk in the market anymore. Okay, so I'm going to do this until the market is going to reverse. So let's wait and see. And sideways, bam. See everybody, the market stop us out with profit. You know, now you must remember, everybody, that there is a difference when we enter up in here, you know, and then you enter down in here. So just quickly, time is moving fast. So we have the next retracement and retracement. Okay, so let's say that we are entering here. Okay, just quickly, there you go. Counter trendline break, relevant low on the short-term trend, stop loss. Okay, let's follow the market. Okay, we have an entry here. Low to high, high to low, low to high. This is the entry, okay? And the market was moving, and we have another entry here. This stop loss goes here. We need to, whoops. So this was the counter trend line. Let's make this green. Okay. So the stop loss goes below or above the most recent lows here. So we have no risk with the first trade, right? Let's see what is going to happen. The market didn't retrace yet. So, and there you go. We have a deep retracement. Counter trendline break again. Higher high, higher low, higher high, higher low. This would be the next low. So this would be the first profit. Okay, this would be the first profit here. The market stop us out, but I'm in the second trade. So let's wait. There you go. No, I'm in a two trades, right? Trade number one is here. This is another trade. Color code orange, and I'm in another trade in here, counter trendline break. I'm in this trade too. This is going to be green. Okay, so retracement, extension, retracement, right? Retracement, extension, retracement so far. So the stop loss goes here. This is the stop loss on the short-term trend. Let's see the market, what is going to do. Sideways. See everybody, the market almost stops us out here. Almost. So this was a deeper retracement. And sideways. And finally took off, right? Finally took off. And here, you know, if we would be trading, this was another counter trendline break. You know, another entry here if you want. Another entry here. another entry here, you know, but just with the first two trades we would cancel and replace, cancel and replace, cancel and replace, and we would come here with our first two trades. And talking about the market, the short-term trend, right? Extension, retracement, extension. So see everybody how this goes. You can make a lot of money doing this, you know. Look at this. And of course, one more time. Here we would pass over the relevant high of the market wave. So we would be managing the stop loss differently. Do we enter after the hourly candle closed past trend line, wait for the next candle made with the new hour high? It's up to your strategy, but yes, you must see the candle closed on the other side of the counter trend line break. Everybody, if this is too much, and if you want to accelerate your learning curve and not waste 1 or 2 or 3 years, ask for private lessons of the Forex course 101. And if you are over and if you want to learn how to trade as a professional, you can always